Hi, everyone. Welcome to Analyze Your Trade, episode number 16 for December 19th, 2017. Tonight, we will be discussing your trade ideas. And over the last few days, we've had over 50 people submit up to 5 symbols each for this week. And I have put the list together. And you should be seeing on your screen right now while I'm talking the list for tonight. We'll get to as many of those as we can. My name is David Cosmeter. I'm the creator of Timing Research, and I developed the show with Dean Jenkins of Follow Me Trades, and he is here to moderate tonight. So I'm going to go ahead and turn it over to him.
All right. Hey, thanks, David. It's good to be here again, and with a panel of absolute expert rock star traders, and looking forward to analyzing these symbols. This is show number 16, so we've been doing this 4 months now. And I remember when we were brainstorming the idea, and it sounded cool, and I think it has been cool. I wonder how many charts we've analyzed now on the show. It's hundreds, probably. But good stuff, and I look forward to this list tonight. Especially, I see BABA Alibaba's up there. I got some thoughts on that. I look forward to hearing what the panel's got to say about that and the rest of the symbols. It's kind of like speed dating, right? We're gonna go through these as quick as we can, offer opinions, and if we have no opinions, we'll just say that if there's no trade. But before we get started, let's go ahead and introduce the panel here. And we're going to start with Lance. Just a minute or two, Lance. Tell us, what do you got focused on? What's your specialty? And a little bit about you.
So I am Lance Ippolito. I am live on AlphaShark.com. We have a live trading room from 11:45 a.m. Eastern time to about 1:30 p.m. Eastern time. My main focus, coming from a CTA, mostly futures trading background, I rarely trade futures anymore, and I focus more on equity options and mostly unusual option activity. I've narrowed down, so let's say there's 3,000 stocks with options, probably about 50 to 70 stocks with insider activity, odd stocks like Wendy's, Match.com, Weight Watchers, really weird VIPS, really weird stocks that a lot of people don't think of trading, and found out when the big players or the insiders come in, I piggyback on them, I follow the whales, and find that unusual option activity and trade with it. I also trade some earnings and all day and swing trade your big momentum names, but really I focus on my main companies that I follow, which is probably about 50 or 70, and when they hit, when they strike, I strike. When they don't, usually I'll trade small or do more short-term stuff. But that's basically it. I do personal mentoring too on the side. People can follow me on Twitter, Lance Ippolito, and send me a message anytime.
All right, and it's good to be on here with you again. And I think we talked before. I love uncovering an unheard of stock. Whenever you do a panel or something, people always want to know about Facebook and Apple and Netflix and Nvidia, right? I love it when I come up with a great symbol and a great chart. It's like, who are they? And then you hit it out of the park, man. That's good fun. I dig that.
Agree.
Oliver, I think we've been on at least one time before.
Yeah, a couple weeks
folks
ago.
that don't know you. Yeah. Go ahead and introduce yourself. What you got going on?
Yeah, thanks a lot for having me again. I'm the German guy living in Scottsdale, Arizona, and since 2005, I've developed a platform that analyzes the impact of news on the U.S. equities markets. And so we look at all the various sources, anything from the Newswire, Reg D disclosures, SEC filings, market rumors, analyst upgrades, and a media monitoring. On average, 5,000 to 10,000 news items a day, and we got a proprietary algorithm that is able to predict moves with a pretty good probability. Both on the long side and short side, and initially we sold the data only into the institutional space, and we also have public companies buying the data, companies like Twitter, Best Buy, Apple, and the likes want to understand how news affects their own stock and how it compares to their peers. And we recently expanded into the retail investor segment as well. So that's a little background about me.
Okay, I think that's incredibly fascinating. You know, an algorithm to crawl basically the news and predict moves based on, and probably, you know, that's incredibly complex and it's incredibly interesting. So I look forward to hearing your analysis on some of the charts we're going to look at today. And then final panelist other than me is Jim Kenney, and we've been on many times together.
Yep.
And but for those that don't know you, Jim,
sure.
Talk about what you got.
Sure. Well, I'm the content provider for the Option Professor DVDs. There's 7 DVDs that they have. They go over all the ins and outs of options, from the idea of creating income and cash flow, from the idea of doing two-sided trades like strangles and spreads, and from the idea of hedging, where basically you use a strategy on options to try to protect an asset or put brackets around an asset so you have a better idea when you go to bed at night what your worst and best case scenarios might be. So I've done this for decades, and that's what we do.
That's awesome. I like your phrase, when you go to bed at night, you know. You know, one of the things I teach in my courses and when I do mentoring is, you know, if you got a position that's keeping you awake at night, you need to go unwind it, because trading should be fun. It should be stress-free, right? And you should know what the downside is. And if you can't live with it, then don't be there. So I liked your phrase, when you go to bed at night, you know what you could make or you could lose, because that's critical, right? Absolutely critical. All right, well, let's go ahead and get to the list. I'm excited to hear what the panelists. Oh, I'm Dean Jenkins, founder of FollowMeTrades.com. So I run a stock advisory service, mentoring service. I publish my picks, the picks I'm trading in my own account with my own money on daily stock charts. I trade equities and options. When I publish a pick, I give the entry price, the stop price, the target price, and I have risk management, position sizing guidelines, and I provide option contract parameters for the same trade, so people can trade it with the shares or the stocks, either way, whatever they like. I love options. And I provide some courses. I have a live trading room in the morning for an hour and a half, right across the open, do some market analysis, key levels, see what's going on in the major commodities, and call out some trades, and of course courses and mentoring. So I'm Dean Jenkins. So let's jump into the charts here. And first one up is a really, really cool stock, Alibaba. We traded this early this year, got a home run on the long on it, and now let's see what we think about this. I'll withhold my opinion on Alibaba, but let's just run down that same order. So Alibaba, the big dog from China. What do you think? This is not a closet symbol. This one is not a hidden gem, right? This is marquee.
Correct. It's not a hidden gem. Let's see if I could screen share here, because I actually have a chart from it from actually some time ago.
Charts are good.
Let's see if we get. All right, we should see Baba right here. Correct? Everyone see Baba?
Yeah.
Okay, perfect. So Baba has been channeling here with trying to break out. I think a lot of people got trapped here around 190, thinking it would run up to 200, and now it's having some support here at 170, but it's starting to break to the downside on actually some volume, which to me, when we're seeing the NASDAQ and the market right near all-time highs, and you have something like Baba continuing to act weak, and when it rallied here, it rallied on really light volume, and it's selling off on heavy volume, as we see. This support here around 170, all the way down to about 163, 164, if it starts to break, or dare I say the market or the China market starts to decline, I think we see 150 in Baba.
Mm-hmm.
But the pattern of the year, and I've said this to a lot of clients of mine, we normally think of bull flags as bullish, and we think of bear flags as bearish. It seems like every bear flag I have seen over the past couple weeks has been very bullish. You know, if I'm looking like at semiconductors in general, they were trading sideways, and now here they are with the up move. the bull case for Alibaba would be some other China names, especially China ETF names, especially in the K-Web. K-Web is the China Internet ETF, which today it was pretty flat, but the day before, yesterday I should say, was up about 3% on a breakout. Those names consist of like VIPS, which had that huge move from about 8.5 to 12, up like 40% the other day. JD.com, kind of a similar chart to BABA. It was acting very weak, and now it's had a lot of juice to the upside. YYWB, names like that. I personally am very bullish. I think it's an upgrade or some kind of catalyst that shoots BABA higher. Just the timing is going to be rough. So for BABA, I would wait a little bit of time to let the bulls come in, start seeing a cross above 180, and then see if there's continuation in China names. I have seen some call buying in select China names like JD, WB, and the K-Web ETF, which is bullish. It's just, when is BABA's time? I don't know yet.
Okay. Pretty interesting. There've been some bear traps, right, in the indexes and some stocks, right? Some people have had to chew their legs off, right? And BABA could be that. I'll get into my analysis in a minute, but it's a tough market to try and short right now, isn't it?
Yeah, here's the thing. It's hard to short, especially the Momo names, because you wake up and NASDAQ's up 1%, S&Ps are up 20 points. What do you do if you're short? Do you run? Do you stay with it? Do you add? It's very hard to be short in a bull market. I think you're playing with fire. Maybe, I'm saying that and the market drops 10%, but for right now, it's too much fire for me.
Yeah. Oliver, I'm curious to hear your analysis, man. What do you think of Alibaba?
Yeah, when we see, let me just pull this up here. Can you see that analyst actions report here? Perfect. So when you see, an analyst upgrading the stock from a buy to a strong buy with a $209 price target, and the stock goes down 3.75%. That was actually on the 29th of November here, on almost triple the volume. If you look at that here, 294%. And then, it continues with the downward pressure. That's not a good sign. I would definitely stay away from any long positions right now.
So you say stay away from any long positions.
Yeah. Now, my personal opinion on shorting during a extended up move, I always like to be market neutral, and obviously it's costing you in an extended up move like we've seen, but no tree ever grows into the sky, so it can't last forever. So the approach I like is buy the biggest momentum gainers that are acting real positive on news, and sell the weak ones that are typically going down on negative news, and make money on the spread. And yeah, sometimes on a real strong up day, I could have captured more if I'm just in there on the long side, but I like to sleep at night, and if I'm pretty balanced, I know my portfolio will do well over time.
All right. Very good. Interesting. Jim, what do you think about Alibaba?
What I think is that the formation that I'm looking at here is it did crack down to 165. That took out the 50-day moving average of 180. Then it tried to snap back to 180, where the 50-day is, and there was a former low not that long ago at that price 180. So 180 was a real big turning point for this thing. Those lows around 180 was mid-November, something like that. So that 180 is definitely a resistance zone, and if you're long, you probably would like to hope that it's setting up a 1-2-3 formation, where 165 to 180 is your one move, the 2 is the pullback that we just see, and then you blow through 180. So if you're bullish, that's what you're hoping for. And if you're bearish, if it starts breaking substantially under 165, you're going to be good. There's a gap between 160 and 165. Maybe they'll just try to take out this 165 low by about $5 and then turn it around. But if I'm looking at this stock and I own it, it seems like a candidate to investigate collars to make sure that you have some kind of floor underneath. Because Tom, Dick, and Harry and all his relatives are probably long this stock. And if they ever decided to sell en masse, it would probably be a pretty nasty scene.
All right, so color would be your strategy from the option professor. So I'm showing my chart here. So Alibaba, we took this long earlier this year, and we wrote it up, and we were really happy. We made some nice profit, good home run on this. I use a combination of Elliott Wave and Ichimoku Cloud. I call it East meets West, and I like to see them overlap and agree with each other. Completely different analysis, and when they agree, that's pretty powerful. So, you know, this whole year up until late in the year, November, big wave 3, big impulsive move on Alibaba. And what we see is, classic Dow theory, higher highs, higher lows, higher highs, higher lows all year long. All of a sudden, boom, we got low. We took out a previous low, we got a low, we got a lower high, and now pulling back. And so I don't see an entry on this one yet. But what I see is a shift in momentum. You can see my price oscillator, my momentum oscillator at the bottom, growing negative. We do have a previous low taken out, a substantial low put in, pull up. So I want to see a new low. I got my light blue cyan colored line here. If we put in a new low below 164.24, I'm short. And I'm going to look for then an Elliott Wave 4 correction down into a Fibonacci zone, 38.2 to 61.8, down these blue lines. And so I've got, a price target, a conservative target of 138.49 if we can prove this pattern of a low, lower high, new low going down. We're under the cloud. We got negative momentum after a big run up. So if we can break a new low, 164.24, I think we're heading down, kind of under 140. And so I'll be watching for that. We do have the 200 SMA as a potential support area. But even if it stalls and finds support there, there's still a pretty good amount of profit. So I'm looking for that final confirmation. If it doesn't break a new low and it heads up, then the uptrend's on with an anomaly in it. But if it puts in a new low, we got a downtrend, and I'll be shorting that. That's my thought on Baba. All right, next chart is T. And we'll just go back up through the order here and lead off with Lance on AT&T.
So I actually really love telecom, especially going into 2018. If you look at telecom in general, which people can look at the IYZ, it's the iShares US Telecom ETF. Telecom has got beat up for all 2018 or all 2017. And recently we've seen in mid-November a little bounce off the lows with very large call buying, notably in Verizon and AT&T. So I like these names. They're high dividend paying names. There's nothing really, from a trading perspective, or especially intraday, really nothing appealing to investors or trader about them. What's AT&T going to do, right? But they're slowly starting to break out to the upside. If we look at AT&T, it had to move from 33 to 39 in about a month. That's huge. You're not going to have a move like that in a Facebook or a Baba or an Apple. Those are big moves, and they're high dividend paying names. And let's say there is market weakness and people don't want to go after the Momo names anymore. I think they're a stable, steady. They're not going to have as much volatility as like a Facebook or Apple or Baba. Force a slow grind up. And actually in the options market a few weeks ago, I saw very, very large call buying, I believe in March, in the IYZ, which is a telecom ETF. And I never, ever see call buying in that ETF. It just goes to show you that institutional traders and investors are looking for a telecom rebound, and a name like AT&T, which trades, a ton of options today, and they're very liquid options. Once involvement in AT&T and other telecom names. So I'm a big fan of AT&T and telecom in general for 2018.
All right, big fan of telecom. Got it. Oliver, your unique perspective on.
Yeah, we had a buy signal here. The end of November on the 29th here, there was a KeyBank came out with analysis of the Q4 viewership trends. The stock has been up almost 8% since then. It's moving up steadily. Here in regards of the merger news on the Time Warner merger here, we're up 9.67% since Bloomberg said that there's significant antitrust matter. So it keeps moving up here. So I think that's a good long situation. And yeah, like I said, it triggered a buy here for our subscribers on the 29th of November, and still in a buy situation.
All right, buy situation for Oliver. The option professor, Jim.
Yeah, Lance nailed it pretty good. The things that are hitting me that he didn't mention is the volume. 40 million plus shares average volume on a 50-day moving average versus a 26 million and change 200-day volume. He's not alone in his thoughts on this sector, because that's a pretty serious differential on the shorter term average volume to the longer term. So they're coming in, and they're probably coming in obviously to get that 5.25, and they're coming in because they're tired of buying things that are got valuations that their noses are bleeding on. So
agreed on that.
I mean, you want to put $10 zillion into that,
So my take on AT&T. I'm a swing trader. I'm a technical trader. I focus primarily on the chart. I want to know if there's any major news planned. Earnings, M&A, drug announcement, whatever. But on this chart, AT&T, one of the things it's a sloppy chart. Right? I like more orderly markets, and this is a gappy bugger. Gap up, gap down, gap up, gap down, and a little bit of unpredictability. And there is big news pending with an unknown outcome, right, with the merger and acquisition, all that stuff. So given all that, a volatile, sloppy chart, it's hitting the 200 SMA. It's reversed off that before. It's a little above it, but it's reversing. They're actually my cell phone carrier. That's who I have my phone with, and there's times I want to throw that against a cement wall. But that notwithstanding, it's just not the kind of chart I'm interested in trading, right? So, because there's better ones out there, there's more orderly markets out there for me. So probably overall pretty good company, right? What do they call companies like this, right? The cell phone carriers, right? If you really like your carrier, it means they're the cream of the crud, right? Nobody loves any of these companies. Mm-hmm. Especially after you spent half an hour on hold with customer support. Anyway, no trade here for me after all that blathering. Next up is MAR. I didn't know what is MAR. I love it when we get a new symbol.
Marriott.
Cool here.
Marriott.
Oh, Marriott. Yeah, I see it.
It's just a mildly bullish chart. Okay. Nothing really to discuss there, right?
The momentum traders are getting slightly aroused when they see this chart. Yeah, that's a great trend. But we'll go in order. We'll do it right. Where are you at on Marriott there, Lan?
At these levels, I'm a little skeptical because we just had a nice high volume breakout to about 135, and now we're pulling back. Although, if you're bullish on the overall market, you have to look and you have to take notice of really the travel sector in general, especially the hotels. I mean, they have just been on a tear. And you have to think about the economy's good. People are traveling, people are spending money, people are staying at hotels, nice hotels. And if you look at some of the recent moves in names like Stay, actually, let me see if I can pull it up. Here we go. We should see a chart of Stay. Stay had news recently. Actually, today they had news of the stock up nearly 3% about the CEO. Right there, that stock moved out of a base out of 17 to 18.5, and we actually saw institutional call buying and Stay. And in Marriott, I've seen really over the past couple of months a lot of 1x2s, so they'll buy the calls until double the amount of a higher strike call. Very bullish price action. If you look at names, even your travel websites, Priceline, after a bad earnings, a nice move off the lows. TripAdvisor, nobody liked it after their bad earnings. That stock is starting to move higher up. Hilton Worldwide, right near a 52-week high as well. It's hard to discount and say, how can you not like a name like Marriott? All the names in that sector look very, very, very bullish, and they've had a great run in 2017. Can it continue in 2018? Possibly. Personally, right now, I'm not looking to get involved in a name like Marriott. It's too extended. Going back, I'd rather look at a name that has gotten beaten down, like an AT&T or like a telecom, maybe even some biotechs or some energy that aren't at these 52-week highs.
I'm with you. As a trader, the one thing I hate to chase a trend, right? I want to catch it fairly early in inception, catch a correction. I look at something like this and go, dang, where was I last December?
Right. Although,
that was my...
we have to point out, though, we could have said probably the same thing when it was at 110, at 120, at 125, and here it is at 133. So that's, the counter argument. What if we're here 2 weeks from now and it's printing 150 or 145? It's like, wow, we just missed out on that move up. So it could continue, but yeah, I kind of have that same aspect to where it's moved so much. I feel a little odd chasing it up here.
Yeah. In the Oliver aspect, what do you think, man?
Well, it's a poster child here for reacting positive on good news. If we look here over the last month, Barclays comes out with a new price target. Stock moves up 5.5% on 273% of regular volume. JP Morgan comes out saying it's not stretched despite the 55% rally. You got Deutsche reaffirming the hold rating. So it comes back to, over large periods of time, if you look at tens of millions of news events, if a stock goes up in a positive news event, you're making money over time if you get into those scenarios. And that's the perfect example here. Keeps reacting exactly like it should, with a close to 100% probability here.
That's pretty interesting. I have a theory that analyst ratings are based more on the quality of the hors d'oeuvres and whether it's an open bar or at the analyst day than fundamentals, but that's just my theory. I think stock, equities definitely move on news, but I question a lot of the analysts and what their models. It just boggles my mind, but that's my thing.
Right,
Jim,
but then if you look at announcements like that here, a new co-brand credit card deal with JP Morgan and American Express, stock moves up. That's something positive. right to the bottom line without any major expenses. They're able to monetize their client base, and stock reacts positively. Just 12% higher volume than usual, but still, another positive news item.
Yeah, absolutely, absolutely. Jim.
Yeah, it seems like there's been a stampede into this stuff because people have done the numbers and they figure they can now afford 3 nights at the Marriott with the tax refund they're going to get. So maybe that's the maybe that's the big thing. The big takeaway is that people think they can go hit the Marriott. But that aside, if you remember, Dean, last month somebody showed you a chart that they wanted you to look at on Micron Technology. And this thing smells a little bit like that kind of looking chart. And I think your view was similar in that it's way too high for you to mess around with one way or the other. And Micron did end up dropping $10 after that meeting. So I don't know what the future is for Marriott, but I know it's about 30% above its 200-day average. So it's certainly getting a little frothy. But like Lance saying, you see it at 150, you could see it wherever it wants to go. But that's a train that's hard to get onto right now.
Yeah, absolutely. I just pulled up that Micron chart, and thanks for reminding us.
Yeah.
Because it makes me look like a genius here. But that's the danger, right? These extended things, they could go on, they could double. Who knows, right? That's the problem. You don't know. Right? I like patterns that have some degree of probability of outcome. Yeah, look at Micron. But that's let's see. So my take on Marriott, I think I've already expressed it. It's a beautiful trend. How can you not stand in awe of a thing doubling in just about a year? But way too late for me to try and jump in, and I try to catch trends pretty close to their inception once they get proven, and then ride them. We did that with Alibaba, right? We saw that coming. Early signs of it. We were able to ride a good part of that move up, and now it looks like it's starting to end. We might try and catch the correction on it. The good news is, when we look at a chart, whether it's Marriott or Micron or Apple or whatever, is we don't have to trade it. That's the good news. And I think some traders kind of fixate. It's like, okay, how am I going to trade Apple, man? And that's the wrong question. Question is, should I? And many times the answer is no. Go find a better chart, man. Go find something that's moving, or that's doing something different. That's my take on it. But the next chart is Netflix. So what do we think about Reed's baby here?
Ooh. Now we're going into we're starting to get into the Momo names now, which make it quite interesting because the first thing I think of the Momo names, your FANG names that make up the NASDAQ a lot is, okay, NASDAQ's at right near 52-week highs, or all-time highs, I should say. And what names are lagging? And a name that, when we have strong names like an Apple or Google or Microsoft, Intel, and then you have names like a Netflix, right? So we have Netflix here, and a couple of things that just strike me of why I don't want to touch Netflix is you have all this media news coming out from, we could talk about the net neutrality, all that, but just in general media stocks. You had, obviously the Disney, Fox news, you had Comcast, have a nice little move off the lows, Discover, a nice little move off the lows. But whereas Netflix been in this whole period, it hasn't been doing anything. Volume's really light. It's been stuck here around 185, 190. And it may be one of these stocks that you don't touch until earnings. And even if you look at the last quarter earnings here, Netflix, everyone thinks, oh, Netflix is going to move up 20% because they had that one big blowout quarter here. Where was this? In, I believe it was July, where it had a huge pop. So everyone thinks that now about earnings, so the options get all jacked up. But it hasn't been doing much lately. And even for intraday or swing trading short term, I've had no desire to trade it. When you have options that are implying a large move and the stock moves within 1 to 2% a day, it's very hard especially if you're an option buyer, to trade it. If you're an option seller, it makes sense because you can, do some kind of like iron condors, iron flies, sell premium around it for a neutral strategy. But for someone like me who I usually like to buy cheap options, cheap out of the money options, and try to get, a double or a triple or plus on that. Netflix is not on my list of stocks that I see that capable of at the moment. And I think it's one of the times you sit on your hand, you say, let all this news pass and wait for the earnings event for a little bit more clarity.
Amen. Amen to that. Oliver, what do you think about
Yeah, I just pulled up. I agree with the trading range here. And if you look at the last quarterly earnings event, you can actually see out of the last 10 quarters, it's actually the second to lowest reaction we've seen. There's only one here on the Q4 here about 15 months ago. That was at 0.2%. But if you look here, typically, it's followed by a stronger reaction here. So you've seen quite a few double-digit reactions here. About half of the, let's see, 1, 2, 3, 4, 5. That's exactly 50%. 5 of the last 10 quarterly earnings were double digits, and very few here were hardly any reaction. So that last quarterly earnings was actually no signal for us. And if you look at on the SEC filings, you see everything is low impact here. So it's just not reacting strongly right now. And even on the analyst actions side here, the last upgrade here, 0.1%. So nothing really of major impact.
Pretty interesting that the impact from earnings isn't substantial. I suspect it's more about subscribers than actual earnings, right?
Yeah, it's about the growth here, even though the July 17th was really a miss, but it was all about subscriber growth and everything, and we saw an 11.8% up move here. And if you scan into that, it was actually here 14.6% since then, and on the event day it was up 11.84%. And volume-wise, 641 million shares, 650% of the regular volume. So huge reaction. But there's rumors now, I just read it today on one of the blogs, that Apple supposedly is preparing a Netflix competitor. Then T-Mobile is entering the subscription TV model here next year with the acquisition they did last week of a Denver-based or Colorado-based company. So a lot of stuff happening in the space, and it's definitely a lot more competition for Netflix. And if they will have to start paying out fees to ensure HD delivery without buffering, that could definitely hurt their bottom lines.
It's pretty. I still got a satellite dish on my roof, and about the only thing we watch on it is just football. But every once in a while, I decide I'm going to cut that off. Right, I don't want to pay that anymore. And I call them up, DirecTV, and go, okay, yeah, come get your gear, man. And they're like, no, what? No, 10 cents a month, man. Would you stay for 10 cents a month, or whatever, some ridiculously low price? Because they're just in this death spiral, and they cannot report, the exodus of customers. They'll do anything to keep you. Probably give it to you for free at this point. I just wonder if the streaming competitors are going to get into that kind of a, it's all about subscribers, and we'll figure out revenue later. Don't know, but yeah, they got great earnings now, but it's just an interesting market. In terms of technical analysis on, they may be setting up for a reversal, but there've been a few bear traps. It's a little choppy. We're down below the cloud. We got a couple potential support areas, so it's something to eye for a short, but I'm not really interested in it. I would definitely not be going long on it. Maybe a short coming up in the future. And I think I skipped you, Jim, so I'm sorry about that.
Yeah, I think you just said what I was going to say anyway, in that it looks almost like identical to BABA, in that it broke its 50-day average. It's in kind of a range of 180, 200, and it looks like it would like to go down, but it's the kind of stock that can surprise you. Competition looks like it's definitely going to be picking up, and at 188 to 1 PE ratio, you can't hit too many bumps in the road. So it's kind of screams, if you own this thing, I personally would look at collars on it.
Very good, very good. They got a great business model, and they were a groundbreaker. I remember Reed Hastings probably 10, 15 years ago. I listened, interviewed, and at that point when they started, they were mailing DVDs out, if you remember. And he said, if you think our business model is all about mailing DVDs to people, you are sorely mistaken. And he's a visionary dude, and I admire what they've done, but the competition is definitely going to heat up. No question about that.
And
so we've been.
Oh, sorry about that.
Yeah, go.
We could probably make the case too on the Netflix. I guess we'll call it a stall or consolidation. We could probably make the case too that other names like Roku have hopped on, and money is pouring out of Netflix and into Roku, as people are thinking, oh, maybe Roku is the new the next darling, and it will start, being like Netflix did. So people are probably saying, all right, well, I've made a ton of money on Netflix. Let me switch that over and put some of that money into Roku. Just, kind of what I'm seeing, how everyone's getting in this Roku, giddy phase where they're just throwing money at it.
It is funny because, maybe there's more to their business than I know, but for my understanding, Roku, they're a gadget company, right? I've got one, and you buy one and you kind of got it for years. I don't think they're going to be creating unique content like Netflix or Amazon, right?
Right. Yeah, and Netflix. Also too, I think when these new shows come out, some people get excited. You've had some negative Hollywood press on some of the shows, and it could just be timing too. I think that's a lot of these media stocks and stuff. It's timing to deal with it as well.
We've had some good discussion here. We got through 4 symbols. Let's before we move on to Apple, let's take a moment and share our individual favorite trades. What's the list? So rather than we've offered some positive or neutral or negative, long, short, whatever on some of these symbols here. But let's talk about what trades we like that aren't on the list. So Lance, what do you like right now? What are you trading that you would share?
Oh man, how much time do we have now? A couple of things I'm in, and that I've just been on a tear. Intel, I got into this 2 days ago. I got into it Friday. I added yesterday, and I added today. I saw Thursday call buying in it, and I started seeing little call buying Thursday in Intel, and I did not participate. And I was kicking myself, and I said, you know what, I'm going to chase it. I've chased it, and I've chased it, and it is working out fantastic. I've already made 200-300% on some of the options here in Intel. Going back, I was loving semiconductors recently. The SMH was the Semiconductor Etf. I started to see call buying, I want to say Wednesday of last week. And, going back to that bear flag comment, if you look at it, I think we can pull it up here. Oh, I forgot I wasn't screen sharing. Here we go. if you look at the Semiconductor ETF, which makes up names like Micron, Intel, AMAT, NVIDIA, this thing was bear flagging. It looked horrible, right? And then I realized, hey, Micron has earnings. They're starting to be call buying, and Intel, maybe we have a change, and you have the SMH. You might be saying, Lance, it's only a $2 move or so, but the options exploded here in SMH. You had volatility rise because Micron earnings, and then you have an ETF that normally doesn't move a lot. When it has even a 1.5% move, that moves the options a lot. So the SMH I got into, and then Intel. I mean, Intel has been on a tear. It looks like it wants to take out 47.30, and every day there is massive call options in Intel, especially towards the close, and they will pay up above the ask in Intel. And yeah, I had to participate. I felt like I was chasing, but I had to. And then you have Micron reporting earnings, Micron beating, and what's popping here after hours, Intel right with it, up about 35 cents. So you have 30-cent move in a name like Intel, especially when you're trading short dated options. Those can really have a big impact, which has worked out fantastic. And I think we continue to see rotation out of the FANGs and into semiconductors that they haven't been acting that well over the past couple of weeks, but recently over the past couple of days we have seen a very bullish order flow and select semis, Micron, Intel, AMAT, and we're seeing that now, and I expect tomorrow the whole media to be talking about Micron and semis. So I like to be in early, which luckily I got in early.
Very cool. Nice trade. Intel. I worked for Intel. I started in '93 and worked there 14 years, and their stock options and employee stock purchase program are the reason I am able to trade for a living today. So,
there you go.
And it was a great company, and I learned so much. I grew so much working there. It was just a tremendous experience. On this chart, man, nice move catching it. I noticed in the regular session, to the tick up against the early November high. So after market, if that can carry through to the open, that will be big news, right?
Huge, especially on volume. If it pops it on volume, look out. We'll get a 50 print soon.
Very, very interesting. So Oliver, what do you like? What's your trade right now? You would share.
I pulled up a couple of things here from Friday. A couple of the hot finds of our system here. This one here on the long side is Crocs. That went up over 13% here on a strong buy trigger here. If you look at the volume, 784% from the time of the event, and on 5.8 million shares. And you can see the average shares per trade is a lot higher than usual. So we look at the past week for the event day, and then we look at the past year for the longer period, and it's all really strong indication here that it's a more than a one-day up move here. And another great example from Friday here, UA Under Armour had a buy trigger here based on news at 12.75 here on Friday, 7:04 in the morning, and actually took 90 minutes to get up to the 2% level here again, more than 5 times the usual volume, 17.3 million shares. Also a lot higher average shares per volume. Typically the stock has a 2.95% range. We saw over 9% range on Friday, and since then we're still at 7.76%. The volume is still way up, 7.7 million shares versus the 4.2 on the 1-year average. and the average shares per trade is still over 300, which is way more than usual. And then on the short side here, Fitbit, it's probably mostly related to the Apple Watch continuing to sell well in that category as the number one wearable. Here, stock is down a little over 6% since Friday. There was a news event at 6:55 in the morning that triggered a sell, and over triple the usual volume, 14.5 million shares, and again here, much bigger average shares per trade. A lot of block shares were traded, but it since then has stalled a little. It's back at the mid 300s on the average number of shares. So that's a couple of examples here that happen every single day out of the thousands and thousands of news items. You don't have to spend time sifting through it on the various sources yourself. It can all be automatically scanned, and you can get triggers in your email box or SMS triggers.
All right, very, very interesting. That news event on Fitbit, we were actually long Fitbit, and when that analyst downgrade came out, I was tempted to violence.
That's
Get rid of the analyst. Get rid of them.
One of the most predictable news items. We track 200 different news categories, and you just cannot fight analyst actions. You better go with the historic behavior.
Can we get a petition going to eliminate analysts? I've already heard the big firms are cutting back on research analysts. I say we just get rid of all of them. I feel like it's the worst thing in the market, because you could buy weekly call options in Tesla. The next day, wake up, it gets downgraded. The stock's down $10, and then if I go buy weekly call options and it gets an upgrade, that's totally fine. But when it goes against me, we need to get rid of the analyst.
Well, these guys are lemmings too, right? One guy upgrades and they all flock to it, right? They're all using the same Excel spreadsheet model, right? And copying each other's assumptions and data.
And changing price targets. I got a price target now on VRX at $12 from $7, while the stock's $10 higher. So we'll just guess on a price, shall we?
Yeah. Hold that thought on VRX. It's funny, Oliver, you mentioned CROX. The first Facebook group I ever joined was, back when they first launched and they had this idea of groups. The first group I ever joined was called, I don't care how comfortable your Crocs are, they make you look like a dork.
Oh, horrible.
Yeah, but they're really comfortable.
Yeah, I'm sure they are. I'm sure they are.
Mario Batali wears them, so that tells you all you need to know.
I like this UA trade. So I made a note of that one, Oliver. I actually think there's a potential correction, bullish correction beginning. I'm pretty interested, and I made a note of it. So I'm going to be tracking that one.
Yeah, you also have Finish Line earnings Wednesday, and then Nike Thursday, and there's been some January call activity and Under Armour too, by the way. So
I think it's got some potential. It's gapped several times, all to the downside. I wonder if that's all flushed out. The skeletons are out of the closet. It's time to climb back up. Could be. We'll see. Jim, what do you like?
Well, I'm 2 weeks ago I thought the Freeport McMoran looked pretty good, and I've been hearing and doing some research, and it seems like the gold stock might not be the worst thing to look at for next year. This is a longer-term value idea where you take a look at inflation and you hear Yellen saying it's transitory, these low numbers. Then you hear about wages, and you got Trump saying wages are going to go through the roof. And then I was listening to a head of a credit department, a bond department out of Boston, a sharp lady, and she's thinking the dollar will be going south. So if you like to go and sniff around things at near their 52-week lows where the option premiums are very low and you can go out 1 or 2 years. Actually, I looked at the options. If you go 2 years, it's only $1 more than going out 1 year. And obviously it's a market that has come way down, but it's going to need gold to break above 1275, 1300. And can that happen? Well, the dollar goes south and inflation picked up, and we got a 3% jump in the 10-year yield today. I don't know if anybody noticed that. It obviously was not a friend to Goldman Sachs because that went south. And we're trading 246, 247 on the 10-year. You start busting up on that and get a few inflation numbers, and dollar goes a little bit south because the deficits are going to be huge. Now you got a game in town. So for next year, investigate that longer term idea on something like Barrick.
All right. Gold, Barrick in particular.
Well, they're dirt cheap, limited risk, dirt cheap, 2 years to be right. And all kinds of stuff maybe hits the fan because, we're playing a lot of games with the budget and the revenues and the expenditures and all that. They may not all play out like they think,
All right. My first pick here is Valiant. I'm long.
Ooh.
We got long at 1940. It's my line right here. So we're up at 2086. We took profit up at this when it reversed, short-term reversal. Got a target up 3102, a previous high off the chart here. Valiant's down for over $200 a share, and it looks like it has found a bottom. Valiant was the poster child, if you remember, during the 2016 and earlier campaign. A lot of folks, they were the poster child for overpricing and bad behavior by drug companies. Easy thing to bash until you can't get your meds. But it looks like a real recovery starting here, and really nice liquid stock. It moves, right? When it moves, it moves.
Mm-hmm.
And there's a big option market on it. So again, we're long on this. We've already taken our first profit, and we're trying to see this thing run up to over $31, and still got profit potential on that. So it's looking pretty good. The other one I like is it's not quite ready yet, but it's Halliburton. So Halliburton is a wave 5 Elliott wave, right? There was the big impulsive move last year, perfect correction this year. This thing's got a 1, 2, 3, and then the fourth time up against trying to put in a new high and get a recovery going. Today it broke through it. So if it can carry through on that tomorrow, it's above the Ichimoku cloud, it's above the 200 SMA. Momentum, nice price target up here at 57.65. So Halliburton, if it can carry through and open tomorrow, I'm going long on Halliburton. I like it. So there's that. And wow, we're like almost out of time. We covered 4 stocks. We all offered our opinion on some good trade ideas. I made note of a couple of them. And let's go ahead and offer closing thoughts. So if you got any kind of last minute thoughts, if you want to throw up a link or a website, something that you'd like people to check out, go ahead and share that. So back to you, Lance.
Let's see if we get this correct. Okay, so by the way, I like your VRX and HAL Halliburton activity. We've seen massive VRX options, both long and short, and then in Halliburton, actually today I picked up on a small a weekly position in MRO as well. Here's my Twitter. People can reach me. Click the website, follow me, private message me, whatever you want. Here, there's my Armani suit at the back of it. I don't know why I have this picture up. And you can email me. Everything is here on Twitter if you follow it. I do have the live trading room with Alpha Shark, which we have the unusual option activity we mostly focus on with the scanner, which looks like this. And it runs continuously throughout the day, picking up institutional order flow. And that's what I mostly trade off. I always say, who knows more, me or the large traders with possible insider information, and most of the time I side with them. But I always appreciate being on the show. Learned a lot, and got some names to look at tomorrow too.
All right. Yeah, I always enjoy coming here and drafting off some good ideas. Oliver, closing thoughts from you, sir.
Yeah, thanks again for having me on the show. We got a free part here for everybody on newsquantified.com. You can get a limited number of gainers and decliners and news items here and earnings events here if you just go to newsquantified.com. And if you want to sign up for one of our webinars or find out more, there's also a chat button here on the bottom right. One of our team members will be answering your questions. So if you want to know more about how you can utilize news in your own investing and trading, with hold times anywhere from intraday up to a couple of months, let us know. We're here to help you. Thanks again for having me.
Yeah, I think you guys, I think it's really interesting what you're doing there. Jim.
Yeah. Well, as always, I invite people to learn more about how the options work. You understand the uses and the risks of all the different strategies that are out there. And basically, they can contact us at optionprofessor@gmail.com if they have any questions on how to get the DVDs. And like I say, there's a lot of different ways to use them: income, cash flow, hedging, and limited risk spec. So, a lot of things going on out there. These DVDs have been very helpful to a lot of investors.
Okay, very good. Options are awesome. I love options, and there's so many different ways to do them. Right. So I'm Dean Jenkins, founder of FollowMeTrades.com. You can see my website I'm sharing here. And, if you want to find out more about me, we've got my track records posted here. Details, you can click these buttons and see every single trade I've taken that make up these results we're posting here. No pictures of Ferraris, no yachts.
Oh, come on. What's going on?
We're making solid, consistent gains year over year. But if you're thinking you're going to take 1,000, turn it to 1,000,000, go see Lance.
No, I find it the most entertaining thing in the world to see these guys, on a laptop trading, driving their Lamborghinis around with trading penny stocks. It is absolutely outrageous, and that's not real life. So
yeah,
just know that, everyone. It's,
just good fun. So yeah, we're getting good solid gains. It's verified. We have a CPA firm audit our results, and then there's a free newsletter, Beyond the Noise. Do a market analysis this week, and that's a great way to get to know me and find out more. So hey, great being here with you, Lance, with Oliver, Jim. Thanks for pulling it all together, David, and I'll go ahead and turn it back over to you.
Yeah, thanks, guys. Great show to end out the year. So this will be the last Timing Research show of the year. We're going to be off for the next few weeks, so Analyze Your Trade. We'll be back with episode number 17 on January 2nd, and then Crowd Forecast News will be back on January 8th. So be sure to join us for those, and have a good holidays until then. For everyone watching, be sure to hit the YouTube subscribe button if you haven't yet to get updates on future shows. And just want to thank all my guests again for this week. Oliver Schmalholz of newsquantified.com, Lance Ippolito of alphashark.com, Jim Kenney of optionprofessor.com, and Dean Jenkins of followmetrades.com. Thanks, guys.
All right, thank you.
Thank you.
Thanks.
Great job. Bye.